And we are live. It's your favorite insurance agent, DarnaldJr, and this is Finlit Live. This is the show where we talk about personal finances. And today we have a personal financial advisor on today. He's having a little technical difficulties, so we'll get him here on a second. But I hope you guys are doing well. I hope you're enjoying your Tuesday. Thanksgiving is in a couple days. I'm just curious, what are you guys doing for Thanksgiving? Drop in the comments what you guys are doing. If you have a favorite thing that you like to do with your family for Thanksgiving, do you have a favorite routine holiday? Let's make it fun. Like financial literacy, it could be an interesting subject, but let's have some fun today. And also let me know where you're tuning in from. I love to know where the audience is tuning in from. This is a show for you, about you, so we can learn about how money works, because ultimately they didn't teach us in school. And so that's the purpose of this show, is to be able to educate us on how to use our money. And I stay in my lane. I've been in the insurance business for over 13 years now, over a whole decade. Wow, time flies by. Blink and it's gone. And so I stay in my lane, but I do know quite a few people. So what I'll do is I'll bring them on the show and I interview them live and I open up to you, the audience. So if you have questions, you could type in the chat. So get prepared to type some questions in the chat for our guest. He's very knowledgeable. I've known him for probably about a year now. We've met through networking events, and that's pretty amazing. So networking is where it's at. So let's see who's tuning in. Where are you from? Well, he's getting ready for, he's having some difficulties over here. The joys of being live. It's great when it's working, but when you have technical difficulties, it's okay. So let me boot him here, and then hopefully he'll log back in. So let's see what is going on in the world right now. One of the things that's interesting is the interest rates are starting to drop a little bit for the mortgage. I don't know. I love following the mortgage industry, the whole real estate industry, because there's a lot happening with it. It's a very dynamic industry, and it's been changing so dramatically over the past couple of years. And so they'll see things starting to ease because inflation is finally starting to get to the point where the Feds like it. And so that's important for all of us, because that means all our gas prices, the food prices, everything isn't going to keep going up and up and up. So that's always a good thing. And then one of the things that affects too, one of the things that's interesting that's happening too is credit card debt is almost at an all-time high. It's been really crazy because I guess everybody's relying on their credit cards nowadays to pay their bills. So that's going to be an interesting indicator to see where things are going. And I know that the job market is tightening. There's a lot of big corporations, a lot of banks actually, that are starting to lay off people. So that's been fascinating to watch, because I have a lot of friends that are in the banking industry, and to see what's happening with the banking industry, it's like, what's really about to happen? So they've been predicting a recession that is supposed to happen this year, but we have yet to see a recession. The stock market has been going up and up and up lately. Same with cryptocurrency. That's a word we haven't heard much about lately, but it's starting to be a buzzword again, because like Bitcoin is around 36,000 the last time I checked, and that it's been up like pretty substantially over the past couple weeks even. And so one of the ones that I like to make people aware of that you might not be aware of is a cryptocurrency called XRP. I actually follow that one pretty closely, because they're trying to disrupt the international remittance market. And they've been going through a lawsuit with the SEC. And basically, the people that created the XRP token won. And so everybody's getting super excited about that. It rallied a little bit, and it's kind of sunken back down, but it's predicted to break record highs eventually. So something to keep track of. This is all about financial literacy and just keeping track of all the news that's happening right now. So I think our guest is on, so let's see if it works. But without any further ado, let's go ahead and get lit. All right, so it doesn't look like his camera's working. So let's see if we could get him on the phone. Where there's a will, there's a way, right? Let's see if he answers. So our guest for today, his name is Mario Fields. And let's see if hey Mario, I have you on speakerphone to talk to our guests. So I don't know what's happening with your device, but we have you on speakerphone.
Yeah, I was connected, but for some reason, it wasn't showing me for being on camera, and then also the mic wasn't working either. But I could hear you and see you, so.
Okay.
But nevertheless, I'm ready to get started whenever you are.
Perfect. Well, thank you for taking time out your busy schedule to be with us. I know you have a lot going on, a lot on your plate, so I appreciate you. Before we get started, can you go ahead and introduce yourself, who you are, where you're from, and what you are up to?
Yes. So, everyone that's listening, my name is Mario Fields, and I'm a financial representative, a financial professional. I'm currently in the process of working on being a certified financial planner. So that's one of my goals for next year. And then also going beyond 2024, having my own practice as a CFP.
Nice.
I'm originally from the Northeast, and I relocated to Houston, Texas in 2011 to do real estate investing. And I often say to people that I accidentally got into the automotive industry, and I did that for almost 10 years, and then made a hard switch into the financial services industry and got my life and health insurance license in 2019, and learned a lot, and I'm still learning a lot, actually. And so, that's kind of the theme of what I wanted to share with all the listeners is what not to do, because there's so many different things that I made mistakes in that, of course, had I known, I would never have made those mistakes. But being that we live in such a information and digital age nowadays, you can find out anything you want to just by doing a quick Google search and searching for whatever you're looking for. So I'm hoping that I can share my personal story to help others and offer some source of financial wisdom on what not to do if you are a young working professional in your 20s or your 30s and you're just starting out in life. There's a lot of financial information that's out there. Some of it's good, some of it's not so good. So it can be kind of confusing to decipher what to do and who to listen to, because there's probably literally hundreds of thousands of maybe even millions of people that, will gladly offer their advice to you, but it may not necessarily work, for your situation. So, but that's a little bit about myself and a brief introduction to our topic of discussion this evening.
Excellent. So that's a new development that you're getting your CFP certification. What inspired you to go that route?
Well, I did some research, and what I discovered was individuals within the financial services industry that acquire that designation, not only do they tend to help more people, but they're also considered a lot more credible. And then also you actually have to go to school and get certified for that, and then also take an actual exam to actually get the designation. And it's a big deal, because basically it's saying to everyone that you're legally certified to talk about, financial planning with individuals. And so it's kind of a big deal, because anybody can kind of offer financial planning, but if you kind of have those extra tools in your tool belt, it's more, I think anyway, I think it's more credible to individuals that are looking to learn and listen from me. So
Absolutely. Well, congratulations on that. I'm a big fan of learning, obviously, and I always say the more I know I don't know. Right?
yeah, I agree with that statement.
So that's why we have you on the show, because you definitely know more about what we're about to talk about than I do. So I appreciate you for that. So yeah, go ahead and dive into your topic for today. So the subject is empowering finance lessons learned as a financial representative. What are some of the lessons you learned and some of the pitfalls we could avoid that you've endured?
Yes, absolutely. So I'm definitely eager to talk about this because I actually just had a conversation with a friend of mine the other day, and this is like a perfect topic to talk about. So I'm going to start from when I went to college, and I signed up for quite a bit of student loans. And at the time, I didn't know anything about student loans or what it was, you know. So I was very uneducated on what student loans are and how it impacts your life. And then also how to pay it back as well. So, I went to school and got my degree in business administration, and I did graduate. And then I also decided that I was going to get my master's degree. And I did that twice, actually, where I went back to school and changed my mind. And then I went back to school again and changed my mind. And both times, this is for when I was trying to go back to get my master's degree, I took out more student loans. So fast forward from then to now to 2023, and the interest on all of those loans that's compounded has shot up the total amount that I'm due to pay back to Uncle Sam. And as everyone listening might already know, the Supreme Court struck down student loan debt forgiveness. They said it was unconstitutional.
Wow.
And so last month, most people that had student loans, they got their first bill that they hadn't received in 3 years.
Wow.
And I definitely got mine.
Oh, wow.
And I was telling a friend of mine the other day, I said, had I known that, student loan debt was the only kind of debt that could never be discharged, it could never be absolved in any kind of bankruptcy,
Correct.
And it literally stays with you for life. So, if you're married and you have a spouse, that becomes your spouse's debt as well. So, if something happens to you, they take on that debt because Uncle Sam will go after them for whatever hasn't been paid from that student loan debt. And even credit card companies will allow you to, I guess you could say, charge off a balance and, allow you to kind of get away, so to speak, with paying it.
For sure.
Not with student loan debt.
That's true.
That will stay with you forever. As long as you are living and you haven't paid it, they'll be sending you bills for you to pay it.
That's incredible.
And a lot of people don't realize that, but I'll share two major lessons that I learned. The first one is when I was contemplating where to go to school, when I was 18. My sister, and actually my mom too, suggested going to community college for like my first 2 years, but I flat out rejected that. I said, no, I'm not going to do that. You know.
Yeah.
But looking back, I would highly recommend for anybody that wants to go to college, consider that as your first option, is going to community college for your first 2 years, or maybe even depending on what your major is or your interest is, you might even decide to go, 3 or 4 years at community college and get your license or certification that you're studying for. And it literally will be saving you probably thousands of dollars, because I'm not even sure what the cost of college is now, but I know that it's somewhere close to 20 or 30,000. I think a full year within 2 semesters.
Yeah, depending on what school you go to.
Right, and depending on what school you go to as well, and then you multiply that times 4 years, and you're close to probably somewhere in the range of 80 to 100 grand, which, I would say is a lot to, be 22 years old and graduate with like almost 100 grand in debt,
Right.
So that would be my first lesson that I would recommend for anyone that's just starting out. And then the second lesson would be, if you do decide that you still want to take out student loans to go to school, I would recommend checking and double checking to see if there's any scholarships and grants, and then use student loans as like your last resort.
Absolutely.
Meaning you've exhausted all of the resources, and then if you have to go that route, figure out a plan for how you're going to pay it off. I would say in less than 10 years after you graduate. Now that's tricky too, because I would say nowadays you definitely need to have a career versus a job. And that's where planning your actual career comes in while you're still in school. So, for example, if you wanted to be a psychologist, you would want to plan that out while you're still in school, so that when you do graduate, you can be working towards paying off any student loans that you may have while you're still pursuing additional credentials for your career.
Right.
And then I would say the third lesson that I would recommend to everyone, and I kind of touched upon this briefly, is to really hone in and think about what kind of career that you actually want for yourself. Because some careers don't require an actual degree. Right. They really may even require just more experience more than anything else. And what a lot of job seekers might notice is, they think it's great if you have a certain amount of education, but they also are looking to have experience with that education.
Absolutely.
So really think about what you want as a career long term, in 10 years and 20 years and 30 years down the road. And how does this particular form of education assist me with that? And like I said, you might even only need certain licenses over a degree, or maybe a certification, or other trades that you might be able to go into. For example, like if you wanted to be an electrician, a lot of people don't realize that plumbers and electricians easily make over $100,000 a year.
Absolutely.
And they don't need a degree for what they do. They definitely need a series of trade schools and licenses for what they do. But once they have those, they easily make well over $100,000 as time goes on.
Nice. Yeah, I was talking to my dental hygienist at my obviously dentist, and she's in her early 20s, and she only went to school for 2 years to get her certification, and she's making over $45 an hour as a dental hygienist. And
Yep.
I was talking to a different office manager about it. She's like, "That's all she's getting paid? We pay her $55 an hour to be a dental hygienist." I was like, wow. So it's like, the more you know, right? But most people aren't aware of positions like that and how well they could pay. So thank you for sharing that. That's awesome.
Sure.
So so the key is just being wise. And a lot of times when people are in high school, they're still kids, and they're not aware of the financial repercussions of the decisions they make, as far as like taking out student loans. I don't know. I guess I was wiser beyond my years, because my goal was to graduate from college debt free, and I chose a very expensive school as a private Christian school, and it was incredible. But for $100,000 university, I only had $7,000 in loans, and that's it. So yeah. But most people don't have that mentality going into college. And that was a huge desire and burden for me. So that's good that you're encouraging our audience to do the same, is to really consider the cost of college, and really just the return on investment. Like, there's some degrees that obviously you'll make more than other degrees, right? Like, you don't want to go to a private Christian school and make $30,000 coming out of it, right? But if you're going to be a doctor or attorney, then that might make sense, right? Because you could get into more prestigious graduate school, and that pays dividends for you once you do graduate.
Right. Yeah. Well, I would say student loan debt is very relevant to a lot of people, because, like I said, literally last month, everybody started getting their first bills in 3 years. And for a lot of people, it probably was sticker shock, and I know I was, because I'm like, wow.
So, question, did they accumulate the interest over the 3 years that y'all didn't have to pay? Do you know? Or did they pause the interest on accumulation?
I think they did pause the interest, but like in my case, because a lot of mine deferred in previous years, a lot of what's been added in there now is the interest that's compounded.
Yep.
Because definitely did not foresee, not having all of that stuff paid off, and I was thinking it would be paid off in less than 10 years, and it's definitely been more than 10 years, so that's one of the things that you live and learn in terms of dealing with that kind of debt. But the other thing too, just kind of in reference to college, because I saw this too when I went to college. I never got into this when I was at college, but I did after college, and that was have credit card. And what I would also say to definitely young people is if you're 18 and you do qualify for a credit card, then yes, by all means, go ahead and apply for one. But if you're 18 to 20, you really should only have just one credit card. And then I say that once you get into certain age brackets, then you can add how many credit cards you have. Like once you get from your 20s to your 30s, then I think you've graduated where you can get you can have a total of 2 credit cards. And then once you get from 30 to 40, I think you've graduated where you can have a total of 3 credit cards, but the goal, of course, is to maintain and keep good credit and continue that. And then basically have those credit cards basically for emergencies. And then if you ever do any kind of traveling or dining out, or you can use those. And a lot of those credit cards offer cashback offers and different perks for traveling and dining out. And that's kind of where you're essentially allowing your debt to actually work for you without you having to do anything. Something else that's kind of relevant to these days is trying to afford and buy a new single family home. I think now the average price for a single family home is about $375. And then you also need to put down 20% towards that as your down payment. So what I would share and recommend to our listeners would be, when it comes to that, explore all your options. You may qualify for a VA loan or an FHA loan. And if you do, that will significantly save how much you have to put down. And you may not even have to put anything down. And then you also would be locking in a lower interest rate as well. And then also credit unions, they also offer pretty good terms as well.
Yeah, I just Googled the average house price in the United States is actually a little bit higher than what you mentioned. It's $430,000 now.
Wow. Okay. So that's inflation for you.
Yep. Inflation really raised things over the past couple of years. And then obviously interest rates are the highest they've been in a long time. So that's why people that are early millennials are struggling to buy a house. But one of the ways of getting a house that you didn't mention was the FDA loan. So FDA loan is a little lesser known, but it's a lot of times you can put zero down for FDA loan, but you do have to live in a rural community to be able to do that. So, but if you don't want to have to save a massive down payment, it's a good vehicle for you.
Right. And then also an FHA loan as well. And those are pretty generous in terms of, what your minimum credit score needs to be. And then I believe it's 3% that they will ask you to put down as a down payment. And now this is something I can speak on too. Depending on the state and the city and the county that you might live in, you might also qualify for first-time home buyer credits. And that's actually what I did and what I qualified for when I bought my house. So there's a lot of resources available for first-time home buyers.
Yep, that's true. And definitely talk to a mortgage broker about that. And they probably have a ton of resources for you. We had a mortgage broker on last week or about 2 weeks ago. And I mean, so if you need connections, definitely reach out to them. But if you need help with your budget and with your finances, Mario here, he's about to become a certified financial planner. So he could do everything from investments to budgeting to helping you to future plan. If you're planning on buying a house, or if you're planning on having a baby, or if you're planning on going on vacation, even. So that's what CFPs are specialists in. Did I miss anything that you guys else that CFPs do?
No, I mean that's pretty much the gist of what we do. I mean, we basically assist individuals and families with their financial planning, and basically from A to Z, just what you said. So whatever financial goals that they may have, and whatever financial planning that they may or may not have already done, we can assist them and go in from start to finish. And typically what happens is, because when you talk about money, that's a very personal and intimate thing. And so
Correct.
it does kind of formulate, I'd say, an intimate relationship, because that's the most personal thing that you can talk about with somebody else, you know?
Yeah, we need to change that though. Make money less taboo. So that's the purpose of the show.
Right.
Yeah, people tend to identify their self-worth based on their bank account, and it's like that's the farthest from the truth. It's but we need to change that, and that should be my new mission for Finlit Live, to change people's perspective on how they associate their self-worth with their money.
Yeah, I agree with you on that.
Because people are invaluable, like priceless. You are priceless. You that are tuning into the show, that's why you're tuning in. You need to hear that today. You are priceless. And so don't let your financial status. So you need to be open to be able to talk to people about money and be vulnerable with it. Because if you're vulnerable, then that's how you could make the big changes. That's how you could build generational wealth. So definitely reach out to like Mario if you get a chance. And Mario, how can they get a hold of you if they want to reach out to you and have that conversation? They want to open up that.
Yes. My business cell phone number, which I think you already have, but I'll share with our listeners, which is 832 815 5558. You can text me or call me, and I'll be more than happy to speak with you and see if I'm able to help you, or at least provide you the resources for those individuals that can help you, because I may not be able to help you, but I know quite a few people and a network of people that can point you in the right direction.
Excellent. Well, any final thoughts for our audience here before we wrap up?
I would just share with everyone to educate yourself financially, because unfortunately financial literacy is not taught in any of our public education, and it's also not taught in college, sadly. So most people walk around in the darkness their whole lives when it comes to financial literacy. And so unfortunately that creates a generation of debtors that are always in debt. And don't get me wrong, there's some debt that is good, but you know, if you're 25 years old, you don't want to be saddled down in $200,000 in debt, because you want to have that financial freedom, as they call it, as early as possible in life. So don't hesitate to educate yourself. Be a sponge and soak up as much financial knowledge as you can. And the last thing that I'll just say is a really, really good way to evaluate if you should hire someone as a financial planner or advisor for you is really just to kind of look at where they're at. And that can give you a really good roadmap to where they can get you to. but typically a really, really good financial planner, they will not just try to sell you on something, but they will try to bring some kind of value to your life. And that, that could be referring you to someone else,
Right.
or telling you up front, hey, I can't help you, but I can provide you these resources and some people that might be able to help you.
Nice. Yeah, that's huge. Wow. Well, you dropped a lot of gems, a lot of nuggets. So we appreciate you for taking time out your evening to be with us, to educate us, and to make us aware of what we should and shouldn't do. Sounds like you've been through a
Yes.
lot and still going through a lot. So we'll pray for your certification process and get super excited for you once you do pass that test.
Yes, thank you. Thank you. I greatly appreciate it. And I definitely feel like it's an honor and a privilege to share what I know with all of your listeners, because I'm sure it definitely will help. Uh, Even if it's just one person, it definitely will help for others to hear that they're not alone.
Absolutely. Cool. Well, I hope you have a good evening.
All right. Thank you. You too.
Thank you. Well, if you got any value out of today's conversation, go ahead and smash that like button. If you're on YouTube, go ahead and subscribe to the YouTube station, all that YouTube stuff. Smash that notification button so that way you can get alerted when we go live every Tuesday nights at 7 p.m. Central Standard Time. And if you have any topics that you like to discuss or have any questions about, they're like, I don't have any resources or people to ask questions, go ahead and type in the comments. And I love to see what questions you personally have. That way I could tailor the guests to what some of the questions you have. So that's what this show is about educating ourselves, because the more we know, the more we could apply and do better in our lives. So I appreciate you guys for being a faithful audience and for tuning in. And I appreciate you guys for getting lit.